Hello, Jim here. One of the greatest ways to make passive income is selling options. I'm making over $320 a day, and I've been able to reach that through sound strategies and finding the right companies to invest in. Today, I want to share with you how I did last month, the strategies I used, and actually share some of my trades. So stay tuned. I think you're really going to enjoy what I have for you. Let's go ahead and jump right in. I typically give a market update. I'm not really going to say much this time. The market's been up and down. It was way up today, way down yesterday. And I think we're going to have a lot more of that going forward. The Fed did pretty much indicate there won't be a cut in March. I'm thinking maybe second quarter, or it may be even later in the year. So I don't think they're in any hurry to be cutting rates. So that being said, let's jump right in. Now, one of the keys for me doing well with selling options is I look at it as investing, not gambling. I'm not looking to try to make a quick buck. I'm trying to build a better portfolio, have better names, better companies, better ETFs. So really what's more important to me is the long haul, slow and steady, trying to make good sound investments and to see those investments grow. And just use options kind of as the extra icing on the cake to increase my returns a bit higher than what they would have been without it. And what I've found is actually I can do a lot better by selling options. I can actually increase that return quite a bit better. I'm going to share with you at the end of this video how I've done overall through all my accounts and how I've done with my new, what I like to call my Fidelity IRA account. We'll talk about that one in particular. And why I've done what I've done related to moving my retirement accounts over to Fidelity at the very end of the video. So a lot really begins with picking good companies. The mistakes I've made selling options over the last couple of years pretty much relates to picking the wrong companies. I made some mistakes. I picked Lumen, which had way too much debt. I also picked Big Lots at one point. Again, too much debt. Also, their stores were kind of in disarray. I should have gone into the stores before I ever made that investment and dug a little bit deeper. I like companies that have a good handle on debt, don't have much debt or no debt. Also, I like companies who pay dividends. It's not necessarily the main reason I might invest in a company, but if they have dividends, then it's something I like. And it's not just dividend yields. It's companies that grow dividends and have lots of income or cash to pay for those dividends. And then I also, you'll notice over here, I also added profitability. In my last video where I talked about some of the miscomings or mistakes you can make, one thing I did not realize, I had suggested Path, and Path actually had some pretty bad profitability. It actually had a negative return on invested capital, which I didn't realize, but I did find within Seeking Alpha, there's a really nice section that has profitability, and it has all the different calculations you need, and it actually compares it to the industry or sector that's associated with that company. At the end of the video, I think I'll also show you that section in Seeking Alpha. So now I'm also looking at that, which I find is really important. In the past, I just looked at year-over-year earnings, but it's not just earnings. It's also the, how profitable they are. How are they using their equity and their investments to help them grow? So just something I wanted to add. I had a subscriber add a comment to the last week's video. And, thank you if you're watching this video and you made that comment, but it's very important piece to be thinking about too. Now, another important part of what's made me successful with selling options or just investing in general is setting goals. I set goals early on. I've been on this journey to learn the right way to sell options. And I started about 3 years ago. And even then I set some real basic goals, and I've increased those goals over the years. I've not made really difficult goals. I've just pretty much set up goals of how much I wanted to earn on a monthly basis and what kind of returns. Initially, I think I started with maybe 500 to 1,000 on a monthly basis. And now I'm looking at around 1,600 weekly and pretty close to 6,500 on a monthly basis, which brings me to that 320 a day. That does break down into about 320 a day. Now, not every day is the same. Like yesterday, I didn't make a trade. It was the last day of January, and I had actually met my goals already. So I'd kind of waited and wanted to see what the market was going to do. So some days I skip making trades. Other days I'll do 2 or 3 trades. So and that works out well for me. I don't. So when you set goals, it's not when I say I'm going to make 320 on a daily basis. It's an average. It's over the whole month. I'm hoping to make 320, 330 on a daily basis. And again, it's really important to remember it's slow and steady. I've had members who, they dove off the high diving board. They took huge amounts of risk. They did tons of contracts and really high deltas. You can really minimize your risk by doing fewer contracts, especially when you're learning how to do it. Picking a lower delta, taking less risk. And typically a lower delta just means you're picking, for a put, a lower strike price, or for a call, a higher strike price. So again, I just like to push that point. I feel too many times I have new members and they have really high expectations. I don't know if it's from watching other YouTubers, but it's very unusual to earn anything over 1, 2, or 3% on a monthly basis. I've had people come into the memberships and they want to make 5% on a monthly basis. I even had someone say they wanted to earn 10% on a monthly basis. And you can potentially do it, but you're going to take a huge amount of risk, and you're as likely to blow up your account as compared to actually making that kind of a return. So, and one of the other things that I like to do is I sell both calls and puts. I feel like a good balance can really make you a better trader. So once you own the stocks, I like to keep them because I like to see the appreciation of the companies over time. To give you for instance, I've got Procter and Gamble. I've had it for many, many years, and I think it grew almost 200% or 125 to 200% over the years I've had it. I've also had Home Depot that's grown, quite a lot. I've had NVIDIA. I think NVIDIA has something like 1,000% return. Now I am trimming some of it. I'll sell a couple of shares here and there when I feel like it's getting too pricey. I don't want to run into the situation that a lot of people ran into in the early 2000s with Cisco. Cisco hit huge. They went way up, and then they dropped, and Cisco still hasn't reached that level that they did 20 years ago. But I do like Cisco. It's one of the companies I really like to invest in. So having a good balance of calls and puts and different strategies, because I've also found that a particular strategy may work for a while with a particular stock or ETF, but then it'll suddenly stop working. And that's where sometimes you need to change the strategies. You need to change what stocks or what ETFs you're working with. Sometimes certain sectors are better than other sectors. So I'd love to find one trade that always works, but I haven't been able to find that. I'm not sure it really exists. And then I also like to do checklists and guidelines. So checklists are when I look to buy a company, I look at certain things like I talked about before: dividends, growing dividends, debt, profitability, earnings, year-over-year earnings, those kinds of things. And I'll share that with you at the end of this video. I've got sections in the spreadsheets I share with my members that includes these checklists as well as guidelines. I also like to have guidelines. My trading strategy for ETFs is different from stocks. It's also different from a growth company versus a value company, or what I consider a bargain stock. No one guideline really fits for those particular types of investments, so you would have different guidelines for, different types of assets. So those are the main things. I'm trying to keep this video shorter. I've seemed to kind of go on way too long. I also want to mention, please hit that like button, subscribe. I'm trying to get the word out. I want people to learn that they can actually trade this way and earn extra income. And as always, if you want to learn more about my memberships, take a look below, and I'll have details about the two different memberships I have. One is just the basic $10 membership. You get access to my trades, you get access to my Patreon. I have collections in there. I have a collection that's like a class. It has 6 lessons. I also have group meetings that are in my higher tiered membership that I share it with my lower tiered membership. So you can find those. You can also find special other types of collections that can be really helpful and worthwhile. So it might be worth your while to take a look. The higher membership I have actually includes coaching on a weekly basis. So I work with people and answer questions. Some people are more advanced traders that may just want to share trades, or they may just want to, kind of touch bases and run some things against me or vice versa. I really enjoy talking with different people. So that membership, it's topped off at 100. I think I'm right around 65, 70 people currently, just because I don't have enough time to do more than 100. So that membership will stay at 100. And I may change my tiers a little bit down the road when I get to that 100 people in that membership. So as always, let's jump into the next part of the video and we'll go into more detail about my trades last month. Okay, I set up a new spreadsheet, and as always, all my spreadsheets are available to my members. I typically upload them. If I forget and you're a member watching, just let me know and I'll upload it to Patreon so that you have access to it. So this is my planning worksheet. I just made some modifications to show just January, so it's got all my January trades. And at the top, it just shows my weekly and monthly goal, how I've done for January. So I did beat my goal by $300, $364. And that's why I stopped trading yesterday. I didn't do any trades. I also got really busy. My clients suddenly, who have been quiet most of the January, have been in contact a lot, and I've spent hours on the phone with several of my clients recently, which is good because I enjoy doing the development work also. So I'm glad it's picked up, but it's made it a little bit more difficult to get the videos done and be able to make the trades. So here I've done a total of 28 trades, and these are in order of when I made them for the month. So I've done several trades with Polaris. I'm not going to go into detail with each and every one of these because it would take a long time. It's kind of all over the place. So I have Polaris, Coca-Cola, Twilio, I think that's how you say it, eBay, Square, CF Industries, XLF, which is, I believe, a mineral company. It's done quite well. I've been trading it for a while. WBA, which I believe is Walgreens, GDX, which is an ETF, and it's one of the only iron condors I did. Another Coca-Cola, Devon, Prudential, XLE. You can see I pretty much have a pretty wide spectrum. I'm by no means a one pony show. I end up working with lots of different companies, and I enjoy that. I really like doing the research, and most, if not all, of the companies that you'll see here I want to own, or I already own them. Like XLE, I own some of it. I own quite a bit of Coca-Cola. I own some eBay. I currently don't own Polaris, but plan to own it. So here I was going to just show you. So in this spreadsheet, I show the premium, and I've kind of noted some that were more profitable. This 2% was a Coca-Cola covered call that was, I believe, got in the money, and I rolled it and didn't make quite as much. But again, with Coca-Cola, I don't worry as much because the cost basis is so low. So one of the best trades I had, which is 131%, mainly related to the fact it was a vertical put credit spread, was CF Industries, and they tend to have lots of expirations and good premium. And this was in my Fidelity account, and it worked out really well. I actually believe I also rolled it once, and it's still fairly outside the money. Another really good trade was this 96.62%, which is the GDX, which is the gold mining ETF. And I did this as an iron condor. I wanted to try something that was a fairly safe iron condor. And it's pretty far outside the money currently on both sides. So right now it's gotten closer to the 27 put side, but it still worked out pretty well. Then here another 96%. This is IWR, one of my favorite ETFs. One I already own. I've owned it for many years and have done quite well with it. But I'm also selling puts in it in my Fidelity not ETF, my Fidelity account, which I'm running the wheel on because I want to own more of this particular ETF as well as some others. I'm looking to fund that account with about 60% would be ETFs, and then the other 40% would be single companies and other types of investments, maybe some REITs. Another interesting point is Palantir. This I did a video a couple weeks ago. This I purchased some Palantir contracts I believe I purchased 4 of them, which you'll see here at $12. And now I'm doing it as a poor man's covered call and selling $19 covered calls against it. And I've sold, I think, one of them at around $177. So I'm looking to earn around 180 to 200 on a monthly basis by selling those 4 covered calls against this $12. Currently, it's bounced around. I think it's like $16.50. It's interesting since it got to as high as $17, almost $18, and I looked to close it at different times just to see how profitable it is. And even now, I could close it and it would be fairly profitable. But I'm going to keep it going. It's one of my first poor man covered calls, so I want to see how it works out long term. Now, some of my other really interesting trades are I had another Palantir trade. This is the covered call I was talking about before that ties in with the 4 up above. And then I have an 89% return in 3M. And 3M, I decided I wanted to own some more of it. I own 100 shares. So I did a vertical put credit spread. It had bad earnings and it dropped majorly. So $90 is really close to its 52-week low. And I did a 419 expiration. And I think it's like $96 currently, but I brought in over $351 in that one trade, or that one vertical put credit spread trade with 2 contracts. So, and then another one that I wanted to note was Devon. It also has been hit hard. I had some shares assigned to me, and now I'm selling covered calls on them. So I believe my cost basis is right around 45. It was currently at 41.39 earlier in the month, but I've been able to do pretty well. It pays like a 4 or 5 variable percent interest rate, and you can do really well with it. So my goal with any of my covered calls is to double the dividends, and at 8.68, that more than doubled the dividends. Now, this next trade was Tesla, and it was the first time I ever traded Tesla, and I ended up doing 15 delta. I sold one put at 150. I believe that's one put. Yep, one put at 150. It currently was 185.44, and I brought in over $380, $384 with an expiration of 419. So I've had people ask, well, why do you go so far out? It's mainly because, that strike price of 150 is really low. If I did a 30-day to earn anywhere near that amount of money, I'd have to take a lot more risk. I probably would have to do a 175 or 180 strike. So by going out closer to 90 days, I think this one is closer to about 70, 75 days. And actually, we can see that over here in the return. So I can't see the formula. So let's do view and add the formula bar back. Yeah, 85 days. So that was more like 85 days when I made the trade. And now the highest, biggest return of any of the trades was this ACLS. And this again was in my new IRA Fidelity. I did a 115, 105 when its price was 133 with an expiration of March. So it worked out really well. And with that made over 135% return if I hold it towards expiration. And that's primarily because of the shorter DTE of 49 days. And then being a vertical put credit spread, I did not need as much cash to cover it. So it's 2,000 for the two contracts at $10 minus the 307.29. That's how you come up with the 1692.71. And then the last trade I will talk about is ASO. And to me, this is Academy Sports, one of my favorite places to go shop. Good company, good handle on debt. Does pay, I believe it does pay a dividend. Just a good company overall. So this is a cash secured put. I did it at 24.22 was the delta. The current price was 64. And I brought in over $400. So if it gets assigned to me, my cost basis would be closer to $53.50, which is a really good price for Academy Sports. And this for a cash secured put is a really good return of 16. And again, this is in my Fidelity IRA, which I'm running the wheel in. So that's pretty much a wheel trade. Okay, now that's the main ones I wanted to talk about. This is the more important part of talking about this spreadsheet. So I did a total of 28 trades, 62 contracts. I did 11 cash secured puts, 7 vertical put credit spreads, 8 covered calls, 1 iron condor, and 1 poor man's covered call. So I definitely a little bit heavier on the put side, and that's primarily because of my Fidelity IRA account where I'm running the wheel in it. Monthly total, this is all my accounts, $67.94, which you saw above, which turns into about a 0.85% return on a monthly basis. And that's based on my, I have about 800,000 that I invest in all the different accounts. Primarily in my brokerages, taxable brokerages, I primarily do covered calls. I'll do a few puts, but mostly covered calls. And then I'm moving all my retirement accounts to Fidelity so I can earn that higher interest rate, which is just shy. It's right at 5%. So I brought in, this is just in my Fidelity IRA account, which is around 220. I brought in 3720, which is like a 1.69 monthly return. So last video, I believe last week, I did nearly 2% in 1 week with this account, but overall for the whole month I did 1.69. Now I've had some of the best months I've ever had were closer to 3%, and then on average I probably do closer to like 1.2 or 1.3, which is still really good, on a yearly basis. Let's see what this is. If we do equal 12 times K67, it's like a 20% return. A little higher than a 20% return, which if you can earn that above whatever interest you're earning of 5%, you can do really well. So that's pretty much what I wanted to talk about. January's been a good month. February's kind of looking like it's going to be a little bit crazy with the market. Like I said, it was up big today, down big yesterday, and I think we're going to continue with that. As always, if you have comments, concerns, you disagree with maybe one of the trades or, want to add something related to one of your own trades, please leave a comment. I try to answer all my comments. And as always, thank you for joining me, and I look forward to seeing you next time. Bye-bye.